Meeting of the Finance Committee to order. The date is October 12th. The time is 3:02. With us today, we have Alderwoman Bade, Alderman Warman, Alderman Bug, myself, Alderman Franco, and in attendance also today, not part of the committee, is Alderman Donnell. First item on the agenda is 23-0794, approval of the minutes of the Finance Committee meeting held on September 29th, 2023. Do we have a motion?
Motion to approve.
We have a motion by Alderman Warman. Do we have a
Second.
second? Second by Alderwoman Bade. All in favor, say aye.
Aye.
Opposed? And that passes 4-0. Madam Clerk, do we have anybody from the public wishing to make a comment?
No, I had no registered speakers.
Okay, thank you. Next, we'll go to the meat of the agenda. First is 23-0796, an ordinance terminating the designation of the River City Tax Increment Financing Redevelopment Project Area, dissolving the River City Special Tax Increment Allocation Fund.
Thank you, Mr. Chairman. Chris Minnick, Chief Financial Officer for the city. Excuse me. Enclosed in your packet this evening this afternoon is an ordinance that terminates the city's River City TIF area, the city's TIF District Number 3. TIF Number 3 was established in 2000 with a base EAV of approximately $5 million. The 2022 levy year EAV is approximately $13,150,000, representing an increase of approximately $8 million over the life of the TIF. That represents an increase of about 160% in that equalized valuation over that time. For the 2022 levy year, the parcels contained within the TIF generated approximately $1,140,000 in total property tax revenue, with approximately $438,000 distributed to the overlapping districts as a result of the taxes attributable to the base EAV, and approximately $701,000 deposited into the TIF fund. It is worthy of note that the 2022 levy year represents taxes paid during calendar year 2023, and it's the most recent data that we have available. The ordinance calls for termination of the TIF to coincide with the end of the 2023 levy year to be collected by taxing districts during 2024. This means that the TIF would effectively end on December 31st, 2024. The increased valuation from the TIF would be available to the overlapping districts beginning with their 2024 levy year requests, and that they would be able to collect those additional revenues beginning in calendar year 2025. At this point in time, we do not anticipate that there will be any cash remaining in the TIF at its termination, with the exception of approximately $200,000 that we will retain to satisfy any refunds that might be necessary to any property owners because of any property tax assessment challenges that would not be concluded at the end of the TIF life. If the ordinance is approved, the notice of the termination will be provided to the overlapping districts in accordance with state statutes. Staff does recommend approval, and I'd be happy to answer any questions.
Questions or comments from the committee? Okay, hearing none, do we have a motion?
Motion to approve.
We have a motion by Alderman Warman. Do we have a second?
Second.
Second by Alderwoman Bade. All in favor, say aye.
Aye.
Opposed? It passes 4-0. Thank you.
Thank you.
Mr. Chairman,
Yes, sir.
could I offer a suggestion?
Yes, sir.
Maybe we could put a map in the Legistar so we clearly identify where this tip is.
We'll make sure that gets done before COW. Thank you.
Next item on the agenda is 23-0784, a resolution authorizing the city to accept a grant award of $487,000 from the Illinois Housing Development Authority Strong Communities Program Round 2 for the maintenance and demolition of abandoned and blighted residential properties.
Good afternoon, Ruthie Harris, Property Standards Manager with Property Standards. I am here asking that you authorize to accept a grant award in the amount of $487,000, and that award will be from the Illinois Housing Development Authority. The grants money will be used to board up unsecured residential structures, keep the exterior of the structures free of debris, while also maintaining the grass. And this will be something that we will do as in order to maintain the structures secured and minimize potential hazards and safety issues in the community while going through the demolition process. Any questions? I'll be happy to answer.
I have a couple of questions. So what do we typically spend per year to do this type of work, to board up? I mean, do we have a ballpark figure?
Actually, I do. For board ups, we do have them sectioned off in different categories. The past 2 years, 21, 22, and 23, so the past 3 years, for board ups, the city has spent $22,000. For demolition costs, it has been a total of $116,000. For junk and trash, $10,000. And for weeds abatement, it's been about $25,000. So in totality, for 3 years, the city has spent approximately $174,000. But that is a low number because we have limited the amount of demolitions due to cost.
So have we applied for this grant in the past? I don't remember if we haven't and received something.
We have in the past, but it was a different program through IDA as well, and that program had stopped for several years. This is a totally different program, but it's similar in the fashion that we can utilize the funds that we get in the same fashion as the previous award that we received.
So this new money, because it's more than what we had spent, will allow us to do what we want to do because we really hadn't been able to based on the limited finances.
Absolutely. And it also allows us the opportunity to use some of the funds that will be awarded to us to apply it to services that we have already conducted in the past 2 years. So we'll be able to recoup some of the money back.
Okay, great. Mr. Alexander?
So, thank you, Mr. Chairman. So just to clarify, we did have a program that was funded. The program stopped. We did fund in subsequent budgets that were affected, but not to the extent we wanted to, based on budgetary constraints, and certainly not to this level. So we're very appreciative that we were able to, one, have this opportunity, two, that the program was restarted, and we were awarded the level of funding here. So staff is very well versed at efficiently using this money to maximize it. So I feel like we've built a very good program. Ruthie leads it with her team, and I think this will help a lot going towards some quality of life issues in the community.
So this is a very specific amount, $487,000. So that's a amount we requested based on what we potentially think we're going to need going forward?
That's what we were awarded from what we presented. That's what IDA decided that we were eligible for. But this program went up to $750,000.
And is this an annual thing that we can apply again next year, or?
This award here will be, we have to spend the monies within 2 years. However, they have it by rounds. This is round 2, so we will continue to apply as we move forward.
Okay, thank you. Alderman Warman.
So this 487,000 is obviously great for the city. If you had to, what would an appropriate budget be to fix everything that needed to be fixed or boarded or that kind of stuff? I mean, is that like millions or less than a
No,
million? If you had to ballpark, yeah, so.
I think right now we have identified the properties as of today that need to be addressed. And based on the costs of demolition for the past couple of properties that we have demolished, the 487 will be sufficient, and I think it's a good number.
Oh, good. Thank you.
If I could just add, I think we've done a great job over the last 6 or 7 years. The number of these types of eligible structures has gone down, which is good.
Mm-hmm.
That's a testament to property standards and inspections. So this number we feel comfortable with will address some of the remaining ones. But our goal ultimately is, of course, no blighted structures, no unsecured structures. So that's something we just continue to work on. Now we did see, obviously COVID in 2020 set us back. The housing market, the effects of that and mortgages and that. So we're keeping a keen eye on what's out there in terms of an inventory, if you will, but it's far less than what we had many years ago. And so we're just very appreciative we have the money now to restart this program. And so long as IDA maintains this program, we will be applying for money. Might be less, hopefully, in the future. And at some point, maybe we won't need this type of money, and we could apply it to something proactive.
Any other questions of the committee?
Motion to approve.
We got a motion by Alderwoman Bay. Do we have a second?
Second.
Second by Alderman Warman. All in favor, say aye. Aye. Opposed? Passes 4-0. Thank you. Next item on the agenda is 23-0809, a resolution authorizing an intergovernmental agreement between the City of Aurora and Batavia Public School District Number 101 concerning tax increment financing districts in the vicinity of Farnsworth Avenue and Bilter Road.
Good afternoon, Chairman Franco, committee members. Trevor Dick, Assistant Director in the Mayor's Office of Economic Development. The purpose of this resolution, as Chairman Franco said, is to authorize an intergovernmental agreement between the City of Aurora and the Batavia Public School District Number 101 concerning tax increment financing districts in the vicinity of Farnsworth Avenue and Bilter Road. The city established the West Farnsworth TIF District Number 7, which is the existing TIF district, back in 2011. And on December 13th, 2011, the parties entered into an intergovernmental agreement. The city is considering establishing a new redevelopment project area to be known as the Farnsworth-Bilter TIF District, which we'll call the new TIF District, which would include certain properties that are currently within the existing TIF District Number 7. This agreement before you today states that the school district consents to the removal of the properties and to the creation of the new TIF district. The existing IGA will remain in effect and is not terminated by this new agreement. Continuing with the same intent as the existing IGA, this new proposed IGA states that each year the new TIF district, while it's in existence, the city will declare 10% of the incremental property taxes deposited into the new TIF district's special tax allocation fund as surplus. The IGA in your packet today meets the intent of both parties, but there is some minor language still being worked out that will be solidified before COW. I'll be happy to answer any questions that you may have.
Questions or comments from the committee? So I just want to ask a question. I think I know the answer. So we work with all our school districts whenever we go into the TIF process, make amendments to it, and basically collaborate with them. So this is what we did with Batavia. And we never really do anything without consulting our school districts on these TIF projects. I just want to get that out there because obviously we've been going through some times where people aren't familiar with what we do and how it's coordinated and how well it works. I just want to make sure we have that on the record. Again, that's kind of what we're doing with the Batavia School District.
Yes, sir. Correct.
All right, thank you. Mr. Alexander?
Yeah, I would like to elaborate a bit on that. So, since 2017, we hold quarterly economic development meetings with all of our school districts, the superintendents, their chief financial officers. So we go over individually by district and collectively as a city, all the economic development projects at that time. We also discuss future projects to the extent we can, and we have information available. We also meet individually with the school districts. We have made over the years presentations at their board meetings. We've had meetings with their board president and their treasurers, whoever they would like. And so those are clearly geared towards the economic development opportunities we approve. We don't bother them because they're busy people, like we all are, with the ones that don't have legs, if you will, and never see the light of day. So we filter through very carefully. So economic development, the mayor's office, we work very hard to kind of separate fact from fiction on people who want to develop and do any type of project in town. But number one always has been, when it comes to the schools, what's their plan? What are they looking to do? And how will this development impact them? And so we're constantly talking to them so we know for every school district, do they need kids? Do Do they not want kids in terms of development? They'll bring more kids. What's their master plan? How does it line up with ours? It would be very foolish, and I've been doing this for a very long time, to go forth without talking to our partners. It's the school districts, it's the park district, it's Fox Metro. We don't do anything without talking to our other governmental partners to see impact and effect. And it's no different with possible TIFs. We do not agree to do TIFs on every single development that comes in blindly. We're a lot more strategic and measured than that.
Thank you. Alderman Bug, did you have something?
I do. This is related to things we've been talking about the last couple of weeks. On the Farnsworth and Bilter TIF location map,
Yes.
maybe Mr. Minnick can chime in on this too, because we were trying to make sure, of course, that the roads, all the necessary roads were in the TIF, and Mr. Minnick mentioned that at our last meeting at City Council. So I'm looking at the yellow there.
Yes.
So go to the far north side of Bilter, so all of Bilter and that section is included. It goes to the far side of Farnsworth there, so all of Farnsworth is included to the yellow.
That's correct.
I don't know if this is what my colleague was talking about the other night. Why doesn't that extend south on Farnsworth? Is it because IDOT picks up right there, or?
I can answer it if you like, Chris. So that's the NICOR easement that runs through there, Alderman, before Corporate Boulevard, and the TIF does not include the NICOR property.
Okay,
So it stops short of Corporate.
all right, so even on the other side, 288, is that IDOT?
What I believe occurred in this case is the blue represents actually TIF number 7, which was
Right.
entered into quite some time ago. I believe that at that point in time, the policy was not in place to go to the far edge of the right-of-way. That's a relatively recent development
Yep.
that has occurred and policy that staff is now following. So any new TIF districts, we're making sure that we include the right-of-way of the adjacent parcels, go all the way to the far side of the road, if you will. But that has not always been the city's policy, is my understanding. So existing TIF number 7, those items, those rights-of-way are not actually included within TIF number 7 as I understand it.
Right. But what we mentioned the other evening, you are able to, through state law, kind of
Yes.
gather that up if the impact to the TIF is on the adjacent roadway.
Yes, provided there is a nexus back to the purposes of the establishment of the TIF district, improvements that otherwise qualify for TIF financing are eligible and able to be charged off to that TIF legally.
Okay.
Mr. Alexander?
And you should have received, if you refreshed, you should have received from the other night, corrected document to replace the one that was there with an explanation. Which includes the roads.
Right. Oh, I understand.
Yeah.
But since we're doing this, we're adding these other parcels to make it cleaner. What if we just added along Farnsworth?
All the way down?
Yeah, just right there.
Are you referring to TIF number 7, Alderman Bug?
Yeah, well, we're adding in these sections in the yellow.
We're actually carving those sections out of TIF number 7 and establishing a brand-new TIF district over those individual parcels.
Right.
Yes. And the yellow represents the boundaries of the new TIF, and the new TIF will include, the Farnsworth-Bilter TIF will include the rights-of-way for the adjoining parcels. That's the way it's written, that's the way it's drawn.
Right.
The legal descriptions are there.
Illegal. Okay.
So the red represents the actual land parcels, and the yellow incorporates the right-of-way, all the way to the other edge of the road.
Right.
That's why it goes onto Church, Bilter, goes
No,
back
I
down
understand.
Farnsworth.
No, I'm just saying for it to be cleaner, we could extend that little yellow strip south on Farnsworth. If you can imagine that the little strip, Chicago continues, and then it kind of stops, and then there's a strip so that O'Hare Airport is in Chicago. There's just a slender strip of land that attaches O'Hare Airport to Chicago. Why can't we extend the yellow south to wherever IDOT, because IDOT has right away.
Well, I think it's written here because it stops at corporate because of the NICOR easement.
Correct.
But is there,
And then
we should investigate, is there a way to just skinny that yellow line farther down Farnsworth to the IDOT?
Right away, yeah.
We can investigate that.
We can definitely
If we
investigate
can
that.
portray it that way. But the reason it looks like this now is because
Yeah, I understand.
of the prohibition at corporate with NICOR. Well, we can look at that and report back at
Sure.
COW.
Yes, sir.
Any other questions or comments? Hearing none, do we have a motion?
Motion to approve?
Do we have a second?
Second.
Second by Alderman Bug. All in favor, say aye.
Aye.
Opposed? Passes 4-0. Thank you.
Thank you.
Next item on the agenda is 23-0805, 2022 audit reports.
I'm going to turn the podium over to our comptroller and assistant city treasurer, Linda Reed.
Good afternoon, I'm Linda Reed, the Comptroller Deputy Treasurer, and we're here presenting our 2022 audit reports. They're coming to you a little bit later than we normally get them to you because of some issues in implementing our new accounting standard, GASB 87. Dan Ferguson is our accounting manager. He just handed out the hard copies of the books that are in your electronic packet. What you should see in your packet is the annual comprehensive financial report, which is the big fat book that has all the pages. The single audit report, which has our federal grants. There's the management letter, and then there's a bound copy of the management letter. That is not a public document. That is the recommendations from the auditors, but that is not in your packet electronically because that is not a public document for distribution. It goes to the Finance Committee. There were no issues encountered with the audit. We got a clean opinion. And I would like to say, before we get started in the presentation, I'd like to thank Dan Ferguson, our accounting manager, our accountants, Anna Ruiz and Daniel Contreras, who are here today, back here, and Samuel Contreras and Barb Bedford, who are not here today, and Stacy Peterson and Jolene Coulter and their teams for all their help, because this is not a solo effort. We're a team effort putting this whole process together. So with that, I would like to introduce Jim Savio, who is our partner from Sikich, and he can tell you all about these fun audit reports. Thank you.
Thanks, Linda, and thanks everyone for your time here today. Do appreciate it. I wanted to just thank Chris, Linda, and the entire staff for all of their assistance throughout the audit process. As Linda said, we implemented a significant new accounting standard, GASB Statement 87, related to leases. So there's a lot of extra work this year. So I want to thank them for their diligence and their professionalism during the entire audit process. What I'd like to do is go through the annual comprehensive financial report first, and I'll start with the table of contents. I believe the report was 255 pages this year, so there's a lot of information in this report. So I just want to give you a kind of a high-level overview in the table of contents of what's in the report. And then I'll touch on a few highlights, and then also talk about the communication to the Finance Committee and management as well. So I'll start on the table of contents in the annual comprehensive financial report. I'll start on the first page of the table of contents. You'll see there's three main sections: the introductory section, the financial section, and then the statistical section is the last section. The main bulk of the report is the financial section. The independent auditor's report is what we issue and are responsible for. That's on pages 1 through 4, and I will talk briefly about that. After that is management discussion and analysis. This is Linda's favorite thing to do every year. She prepares this, and I'll talk real briefly about that too. Then after that are what we call the basic financial statements. So this is what we give an opinion on, are the basic financial statements. We start with the government-wide financial statements. the statement of net position, and then the statement of activities. So this is your balance sheet and your income statement. They're the consolidated financial statements for the city. So it's going to have all of the funds except for the fiduciary funds, broken out between governmental activities, which are your governmental funds, and then business type activities such as water and sewer, your Gulf funds, airport, et cetera. It has a long-term focus, has capital assets, it has long-term debt, and it's similar to private sector reporting. Now contrast that with the governmental fund financial statements that start on page 9. These have a short-term focus, so they're just focused on spendable resources, similar to how you budget. They'll be presented by major fund, and then all the non-major funds are combined into one column. And then there's a reconciliation on pages 11 and 13 that kind of show you how you get from that short-term focus to the long-term focus. Now, on the second page of the table of contents, the proprietary funds are after the governmental funds. You'll see there's basically a balance sheet, income statement, and a statement of cash flows. This has the same long-term focus, just has a little more detail and a statement of cash flows. And then the fiduciary funds follow after that. This is your police pension, fire pension, and retiree health funds combined. Again, balance sheet and an income statement with that, again, long-term focus. After that, then, are the notes to the financial statements on 21 through 89. I promise I won't go through all of these, but a lot of great additional information that supports the basic financial statements and should be read in conjunction with it. After that, then, is the required supplementary information, or RSI, I might refer to it as. There's a budget versus actual report for your general fund, and then more information on your participation in the pension funds and then the retiree health fund as well. After the required supplementary information are the combining and individual fund financial statements and schedules. They start on page 107. A lot of combining financial statements and a lot of detailed budget versus actual schedules. So a lot of great additional information on all of your funds. And then after that is the statistical section, the very last section. You'll see there's various categories of the stats sections here. A lot of great 10-year trend information that is really kind of enlightening, kind of puts the financial statements in the proper perspective. Probably this section is more interesting to the non-accountant, to be honest. So there's a lot of good, interesting information in the stats section. So that's what's in the report. Like I said, there's 255 pages, a lot of info. What I'll talk about now is going to be page 1. That's the first page of the independent auditor's report. So last year, you may remember we adopted some new auditing standards. So changed the content, a little bit of the format of the report. So one thing you may remember is the opinion section is now the very first section of the report. And you'll see in that second paragraph, we stated our opinion is the financial statements are fairly stated in all material respects in accordance with accounting principles generally accepted in the United States of America. So an unmodified opinion, which is the highest level of assurance that we can provide to the city. After that, as Linda and I mentioned, we did adopt a significant new standard, GASB 87, related to leases. And now for the first time, you'll record on the face of the balance sheet both leases on the lessor and the lessee side. So that's something that's new. It was a significant process. A lot of the leases were very old, so going through that information took a significant amount of time and effort. Through it all, we did note several lessor and lessee leases. The significant ones, though, were related to, I think, just a handful at the airport. They were about $9 million in receivables on the lessor side.
Can I ask you a question real quick? Sure. So this is new, the lease part of this.
Correct.
Is this new, should we have been doing this in the past, or is this just something that's,
It was
how does that work?
a new standard that became effective for 12/31/22 for the city. So, yes, previously it was accounted for not on the balance sheet, sort of like off-balance sheet financing. So you would show a revenue and an expense for a lessor or a lessee lease. You may have a footnote on it, but nothing ever showed up on the balance sheet. So this was a new standard that was effective for this last fiscal year.
Yeah, if I may, Mr. Chair, the Governmental Accounting Standards Board is constantly evaluating the quality and the data and the information that we disclose and are required to disclose in our annual financial report. And this is just one of the latest items that they have updated. So it was not a requirement in the past, as Mr. Savio had indicated, but it is now considered part of generally accepted accounting principles. And in order to be able to achieve that unmodified opinion that Mr. Savio talked about a moment ago, we'll need to comply with it from now and into the future.
Alderman Warman, did you have a question?
Not in much detail, but I was going to ask if that was because of GASB. So, but
Correct,
covered it much better
absolutely.
than I-
All right, great, thank you.
Great, yep. So the change in accounting principle, there is more information on that in footnote 20. And then the various leases are also disclosed in footnote 4, which is the capital asset footnote, footnote 5, which is the long-term debt footnote, and then footnote 8 is a separate footnote on the lessor side for the leases. So there's more information there. And then the last thing I'll talk about in the independent auditor's report is on page 3 under other matters. So like I said, we give an opinion on the basic financial statements, but this tells you what we do, what procedures we perform on the other information. So the required supplementary information, we do some limited procedures. We read the information, make sure it's consistent with the basic financial statements, but not enough to give an opinion. So that is explained here. The supplementary information is the combining an individual fund financial statements and schedules. We give what we call an in relation to opinion on this. So in relation to the basic financial statements, they are fairly stated. And then the other information is the introductory section, statistical section, and then additional disclosures. This information we don't give an opinion on. We do read it, make sure it's not materially inconsistent with the basic financial statements or not otherwise materially misstated. If it were so, we would request that you correct it, and if it wasn't, then we would communicate that to you. So we didn't find any material inconsistencies there. So that's the independent auditor's report. The management discussion and analysis starts right after that on MD&A page 1. I point this out every year, but it's a great overview of the city's financial position and changes in financial position. Highlights any significant changes like GASB 87 that may have occurred throughout the year. It does have some 2-year comparative data that you can't find elsewhere in the report. So encourage you to read the MD&A because it provides a good overview of the city's finances, and you don't have to read the other 255 pages. So I'll start. I'm going to just talk real briefly on the general fund. And that starts on page 9. So these are the short-term focused governmental funds. And the very first column is the general fund. And I'll just talk about the fund balance, unassigned amounts on page 10, all the way down at the bottom. You'll see the unassigned fund balance was about $29.3 million this year. That's about 14% of current year expenditures, or about a 2-month reserve. The prior year amount was $24.3 million. And your fund balance policy is described on page 31 in the report. And then the income statement for the general fund starts on page 12. Again, it's the first column is your general fund, and about halfway down the page, you'll see the excess of revenues over expenditures of about $27 million this year. There was transfers in and out net of about $21.5 million transfers out, and then the change in fund balance for the year was $5.5 million. Last year, the prior year excess of revenues over expenses was about $24 million. Net transfers out last year was about almost $39 million. And then the change in fund balance for the general fund was a reduction of about $15 million after the transfers. And the last thing I'm going to talk about is going to be in the RSI. I usually point this out, but I'll just talk real briefly about your the status of your pension funds. So that's going to be starting on page 95. So page 95 is the schedule of changes in the employer's net pension liability and related ratios. So this basically shows you your funded status for your Illinois Municipal Retirement Fund on page 95. So the total pension liability is what the actuary at IMRF says the liability is as of 12/31, because IMRF is on a calendar year. And then the plan fiduciary net position is what you've paid into IMRF and is in trust to pay for those liabilities. And then the net pension liability or asset is that very last line on page 95. So as of 12/31/21, because we present information a year earlier for IMRF, you'll see that there's an asset of about $20.2 million as of 12/31/21. Now, with the bad returns in FY22, that's probably flipped over to a liability at this point. And then the funded ratio is on page 96, that very first line. So you'll see the funded ratio has been pretty good. It's been above 80% for all the years presented. Last year, 12/31/21, it was about 107%. And then the same information for the police pension is on page 97. And again, that very last line shows you the net pension liability. And you'll see there was a bit of a decrease from 2021 to 2022. Change in assumptions was very positive because interest rates are rising. So as they rise, the liability goes down. So that reduced the liability slightly. Then the funded ratio was pretty consistent. It's been pretty consistent since 2014, right around 50%. And then 99 shows the same information for the firefighters. Again, the pension liability went from about 230 million down to about 218. And funded ratio, again, is pretty consistent year over year, right around 50%. So that's all I have on the annual comprehensive financial report. I'll talk real briefly on the board communication that Linda gave you. So that's the auditor's communication to the Finance Committee of the City Council and Management.
We have a question for you real quick.
Oh, sure.
While we are on this, I wanted to ask something about year 2022 on page 217.
217, you said?
Yeah, page 217.
Yeah.
So by when will we get for 2022? Year 2022.
Yeah, give me 1 second to get down there.
So ratios of general bonded debt outstanding ratio.
Okay. Yeah, it looked like this PDF might be missing the 2022 info.
Yeah, because it mentions last 10
Gotcha.
fiscal years and,
Yeah, we'll check that and
Okay.
get that updated.
thank you.
So the board communication report, I'll go through the table of contents too real quickly. So there's some required communication that we have to have each year with the Finance Committee. That is on pages 2 through 4. We did communicate, we implemented GASB Statement 87. And we also discussed that we had, some delays related to implementing GASB 87. Otherwise, pretty routine communication, didn't have any disagreements with management. Everything else was pretty routine this year. Now, after that, we have to communicate our adjusting journal entries. So these are entries we found as part of the audit process and were detected during our procedures. So that is on pages 5 through 10. We had 16 entries, so I believe a few less than the prior year. And then the past adjustment schedule is on page 11. And these are entries that were deemed to be immaterial, but above a certain floor, we have to communicate that to those charged with governance. So we just had one entry on page 11. And then the communication of deficiencies and internal control and other comments start on page 12. And we only had one new comment this year, just a deficiency related to the implementation for the lease standard. And that is on page 14. And then the status of the prior year comments is on page 18. So you can see we had some deficiencies in the prior year. So there's a status that'll show you an update on the status of those comments, and then any management responses as well will be included in there. And you'll see that some of those comments were implemented in the FY22. So we did issue a one-page management letter as well. And basically what this states in writing is that there were no material weaknesses. We also didn't have any significant deficiencies. We issued a single audit because obviously each year you expend more than $750,000 in federal funds. So that single audit report was also issued. And
Jim, can I stop you for
Yeah,
a second?
sure.
Before you go on, could you explain kind of the hierarchy between the significant deficiency, the deficiency, et cetera?
Sure. So a material weakness would be the most severe deficiency. Significant deficiency would be less severe but still requires comment. So those have to be in writing and have to be communicated. So the city didn't have any material weaknesses or significant deficiencies. It was just common deficiencies that we noted in the board communication report. Yep, no problem. So then we also issued an in relation to opinion on the consolidated year-end financial report. Now, this is the schedule that the Illinois Grant Accountability and Transparency Act requires. So if you expend more than $300,000 in state and federal funds, those amounts, we have to give basically an in relation to opinion on that report. So that is included as well. We did issue separate TIF reports on your compliance with Public Act 85-1142. Those were all unmodified opinions as well. And then we issued separate reports for the police, fire, and retiree health as well. A lot of that information, though, is included in the ACFR. So it's just a separate report, but all that information is also included in the annual comprehensive financial report. So those are all of the reports. Be happy to answer any questions that the committee might have.
And
Questions or comments from the committee?
may I make a comment, Mr. Chair? I know that there was a lot of discussion related to the TIF districts as we went through the summertime months. And as we discussed, the auditors are unable to release those individual TIF reports until all of the information for the remainder of the audit is available, complete, and ready to be issued. So as you recall, we did talk about the delay in filing the TIF reports being related to the delay we experienced in implementing GASB number 87. We'll hopefully without a new GASB 87 standard to implement this year, although there is one, a more minor one, that we do need to take a look at and implement during our audit for 2023. We hope to have the TIF reports and all of the audit reports filed a little more timely next year. So thank you.
Thank you.
Yeah, in the TIF reports, we referenced our opinion in the annual comprehensive financial report, so we can't issue the TIF reports if that other ACFR opinion isn't also issued and on the street, so that's why it's delayed. So.
All right. Alderman Bay, did you have a question?
No, I just wanted to say thank you for the great report.
Yep, you're welcome.
Any questions or comments from the committee? Well, thank you, because I know this is a lot of work. It's a lot of work for our department. I'll be thanking you guys over the next month because I know how much work we put in and going forward. Thank you, because you guys do a wonderful job every year. And in summation, City of Aurora is looking pretty good financially. I mean, everybody's doing a good job. You know, these guys are doing their job over there.
Yeah, absolutely. I mean, as you can see, what I always tell people is look at the independent auditor's report and that opinion, then look at the board communication report, see how many journal entries there are, if there's material weaknesses or significant deficiencies. So we don't really issue a report card, but that's kind of our report card is look at those things and see if there's, that's going to tell you if there's any issues. So yeah, as far as the work that the staff's done, they've done a great job. And like I said, GASB 87 was a difficult implementation because some of these leases, date back 30, 40 years.
Sure.
So it was a lot of work to, one, accumulate it, make sure we had a complete list of leases, and then going through the work to calculate what the actual balances were. So it was a challenging year this year, but
Right.
they did a
But
great
going
job.
forward with this, because we've laid the foundation now, and it should be relatively routine every year.
Exactly. We're only looking now at new leases, which we can see in the board minutes and discussions with management and stuff. So yeah, it should be a lot less difficult.
Yes.
Any other questions, comments? Thank you so much.
May I,
Oh, Mr.
I have
Minnick,
one
I'm
more
sorry.
thing. I would like to publicly recognize Linda, Dan, Stacy, Anna, Daniel, and Jolene, and the rest of the accounting and finance department staff for all their hard work and dedication, especially in what was a pretty challenging year with some of the new accounting standards. So I'd like to thank every one of you for your efforts in relation to getting the audit to completion and maintaining our standard of excellence.
Thank you. Thank you.
Yeah,
again
yeah,
for that.
Dan.
Appreciate it. Yes.
If any of you ever have questions about this or would like me to come and sit down with you and explain what you're finding here, I'm happy to do that. I know it's a lot of overwhelming work, but after you read the MD&A, if you still have questions, we're
Right.
here.
Thank you. Appreciate that.
And
Thank you.
Dan Ferguson drew the short straw, so he had to implement GASB 87. So the new guy had to do it. So
All right, well, that's
a
all
special shout out to Dan
It's
too.
initiation. Thank you. Appreciate it.
Yeah, he gets a double kudos.
Yeah,
Good.
exactly.
Thank you so much.
Yeah,
Appreciate
thanks
it.
for your time.
Thank you. Thank you. Next item on the agenda is 23-0813. It's for information only. It's overview discussion of the 2024 budget.
Thank you. I think, well, we have a PowerPoint presentation to go with this. It was also included in your packets or in the Legistar item this evening as well, or this afternoon. Thank you, Chris Minnick, Chief Financial Officer. Again, I'd like to present the 2024 budget overview. Today, I'm going to go over a really brief discussion and overview of some highlights in the 2024 budget. This budget draft. This presentation will be mainly limited to concepts and thoughts. We'll have a little bit of a more detailed overview before the detailed departmental presentations at Tuesday's Finance Committee meeting, and we'll have some detailed departmental presentations occurring over the next 6 weeks. So today, we're just going to do a little bit of an appetizer and wet the palate a little bit for what's coming up over the next 6 weeks. Really briefly, just today's agenda, review the proposed 2024 budget draft. We'll go over some highlights from all the funds. We'll talk over the general fund in a little bit more detail, and then we'll go over the next steps in the process and the scheduling that we can anticipate occurring over the next 6 weeks. In summary, probably the two most key concepts within the 2024 budget are that, number one, the budget is balanced. We anticipate approximately $560 million of activity to flow through the city organization during calendar year 2024. Additionally, the second most important concept, we are not proposing any tax rate increases as part of the budget during 2024. We do actually anticipate, in fact, that our property tax rate will continue to decline. This will mark the 10th straight year that we will have experienced a property tax rate decline. And we're seeing that primarily as a result of a significant increase in the value of the tax base. 2023 is a reassessment year for a significant portion of the city, and that is having a very positive influence on the tax base and EAV of the city of Aurora. We are proposing a slight levy increase to offset public safety pension costs. Consistent with prior year, we will see our tax levy, the dollar amount, going up a little bit to reflect some increased municipal contributions that are required within our public safety pension funds. As was mentioned earlier during Mr. Savio's presentation, the 2022 investment market performance was poor across the board. 2022 was a tough year in the equity markets and in the fixed income markets. It's reversed somewhat in 2023, but we base our 2024 property tax contribution on an actuarial study that's done as of December 31st of 2022. Because of the way of the timing of the property tax market, property tax timeline, we need to, that's the date by which we need to set those contributions. Additionally, contributing, the city finances its public safety pensions in two ways. One is through the property tax levy. The second is through an allocation of what's known as personal property replacement tax, or PPRT. Previously, the Department of Revenue has the Illinois Department of Revenue has the responsibility of collecting and distributing PPRT revenue back to the individual municipalities and districts that are eligible for it. During their most recent fiscal year that ended, I believe, June 30th of 23, the state misallocated receipts between personal property replacement taxes and income taxes. They overallocated PPRT revenue. That resulted in the city contributing more PPRT revenue to the public safety pensions, thereby reducing the amount of the property tax levy last year. But the impact is kind of a double whammy this year. The state of Illinois is going to correct the PPRT to its proper level. Then they're going to correct for the overpayment that they made last year. So we're having a bit of a double whammy going into our public safety pension costs. The result in the last bullet point, as I note, it lowered the previous property tax levy for public safety pensions. In terms of some global themes within the 2024 budget, we are continuing our strong economic development focus. We do anticipate that the consumptive taxes, sales taxes, hotel tax revenues, food and beverage tax, things of that nature, are going to continue to increase. We've seen very good performance as new businesses have opened here in the community, and we do expect that to continue. Additionally, we expect and anticipate and have budgeted for balanced operations in our enterprise fund, our air funds, our water and sewer fund, our golf fund, our airport fund. We do anticipate balanced operations in those enterprises. And we're continuing to see our key administration goals prioritized, those being public safety, economic development, and innovation and community support and collaboration. In terms of capital projects, we do see some of those capital priorities from prior years continuing, and things we've planned for starting to come to fruition in 2024 and in a couple of the years subsequent. We do see the Public Works facility, probably 2024 will most likely mark the last significant year of activity related to the construction of the Public Works facility. We do anticipate that toward the end of 24, perhaps in 25, early 25, that we will be occupying that. We're seeing continued activity in fire station design and construction. We just approved, I believe Tuesday night, the design services for those 3 fire stations, and we'll continue moving forward with those in the coming years. The River Edge Park expansion is also budgeted in 2024, as well as capital maintenance for our facilities and our infrastructure. Additionally, in 2024, we're also seeing funds allocated for technology improvements. We anticipate the initial phases and initial studies to begin in 2024 for our CAD RMS project, with implementation beginning in earnest most likely in 2025 and continuing through that that cycle. Additionally, we're implementing managed services for printers and copiers during 2024, as well as continued support for our STEAM Academy, and camera and physical security upgrades are also planned. I mentioned the levy increase at the beginning of the presentation. We are again anticipating that our rate will decline for the 10th straight year. We anticipate that the property tax rate will be the lowest since at least 2011, once we get all the finalized data back from the counties next spring. And additionally, we did mention the EAV anticipated to increase significantly. The dollar amount of the increase in the levy is actually about $1.9 million. That represents 2.2%. We did see, as I mentioned a moment ago, a $2,250,000 increase to the municipal portion of the public safety tax levies. That represents about 2.2%. We have seen that be in line with some other recent public safety pension increases overall, and we talked a little bit about the reasons why. Additionally, the increase in the levy and the increase in the public safety contributions has been offset by a reduction of about $325,000 in our general tax levy. So we are sacrificing in some other areas so that we can make those actuarially required contributions to the pension levies during 2024. Moving on to the general fund. The general fund is balanced. We anticipate about $233 million of revenue and expenditure activity. That represents a $9.8 million increase, or about 4.5% over the 2023 budget. We're planning for expansion of public safety services. We have personnel budgeted for Medic 12 so that when those new fire stations are completed, we'll actually have a medic team to move into it as soon as it's ready to be occupied. We're also budgeting for the addition of 7 police officers, as well as a police lieutenant, continuing our funding for special events, and continuing funding as well for community initiatives and support. In terms of the next steps, we will have detailed departmental presentations on the budget for approximately the next month at various specially and regularly scheduled meetings of the Finance Committee. We will do a final overview and request a final overview presentation and request a committee recommendation on November 30th, with the budget then going to Committee of the Whole and City Council on December 5th. And we would then bring forward the ordinance for the 2023 levy year tax levy and have that considered at City Council on December 12th. So again, a brief overview. I'll do a little bit more and hit a few more of the numbers before we do the Finance Department on Tuesday, but I'd be happy to answer any questions that anybody may have initially.
Questions or comments from the committee? Well, thank you. It was a nice overview. I think we're all going to be ready for next Tuesday for the important steps of the budget process. So thank you for putting that together. It's kind of nice to get like a little warm up here, a little pregame type of thing, a preseason thing. So we get our minds thought in that financial type. You really have to, for us at least, we got to have that mindset. So this was kind of nice to wet our whistle that way. So
absolutely, and we talked about the audit a few moments ago being approximately 250 pages. The budget is closer to 1,350. It's I think we're in the 1330s this year in terms of pages for the budget. So it is a large document. I think it's valuable to have that view from the 30,000-foot level to before we start getting into the weeds.
Well, I can assure you that this Finance Committee will read every page, probably halfway done already, but it'd be a long weekend for some of us. So we're prepared, like we are every year. So thank you for all the work you do. Thank you, guys, and you hear a lot of thank yous for this, because I know this is not a seasonal thing, this is a year-round thing, so I know you guys put a lot of time and effort in it, so.
Yes,
do
thank
a
you.
really
And,
good job.
yeah, and I would be remiss if I didn't recognize Stacy Peterson and the work that she did, compiling all the budget information and being very timely with requesting the information from the other departments. The departments also filled in and did a great job, got us everything on time. And also Mr. Alexander, would like to thank him and publicly recognize him for his guidance as we move forward. So thank you very much. And here we go.
See you Tuesday. Good.
Okay, thank you.
Anything else to come before the Finance Committee today? Hearing
Motion
none,
to
do we have a
adjourn.
motion to adjourn? We have a motion by Alderwoman Bay, second by Alderman Bug. All in favor, say aye.
Aye.
And we are officially adjourned at, what time is it? 4:01. Thank you.